Hi everyone, Pete here. I wanted to record a quick video to review the steps that I took to find a 1000% plus call out for the Discord, which ended up being ARK calls for January. So I thought it might be helpful just so you can understand how I view charts and what I'm looking for before I alert a trade and enter a trade. So let me share my screen here and we can jump into the ARK chart. And so what you can see here is on October 21st, I called out $55 ARK calls for January 17th at 0.76. And the reason why I'll explain why I said that it was a high risk lotto at the time. And then also let's look to see where we are at now. So you can see here, right? We have the $55 ARK calls. This is for, I'll show you. This is for January 17th. We have $55 ARK calls, which are now way in the money. And they're trading around 8.65. So remember, we entered at 0.76 and they're at 8.65 now. And so how did I do that? Let's see. So first off, I like to look at larger time frames first. And so what I ended up doing, and here we can hide some of this. What I ended up doing first was number one, you can see that it looked like ARK bottomed out, right? You had some volume coming in and you had what looked like to be a rounded bottom. And then on the monthly, what I did is I first started charting out the imbalances and the fair value gaps. So you have a monthly fair value gap here. You also actually have one here starting around $97. And then if you drill it down further, you could see that there's quite a few weekly imbalances. So where the bodies don't touch and these areas haven't been re-explored yet. I usually like to target these imbalances as my targets long term. So you can see one here, and then you could see one here. And this one, obviously, if we go to where we are now, we already re-explored this one. So what you could see it where this is now acting as support, but I don't want to jump the gun. And then this gap here is a daily gap here. And this red box is my ultimate target, which we could see we're close here. You could also see if you zoom out on the weekly, does this chart look familiar to anyone? Show you what I'm talking about. So look at that. Okay, so if you remember, back in 2021, ARK was in euphoria. And then we started getting into complacency, denial, panic, and then anger. This was anger. A lot of people are upset with Kathy in 2022 and into 2023. And so while I don't expect it to make it up to these prices, like I said, I am expecting this red box, which also I'll show you why as well. So I guess to kind of take a step back, different things I look for when I'm charting. So first off, like I said, I like to start off on the larger time frames. Oftentimes I'll even go to the 3-month. I don't know. I can't remember if I did for this one. Yep. So you can see 3-month, and this is actually a 3-month fair value gap. So we can actually update this. I like to call out the larger ones. 3-month fair value gap. We have our target here. And again, you can see this was a high volume sell off, and then bullish volume started coming in, which caught us. And then we could look at the fib retracements, which I have on the monthly before this sell off. Okay, so I like to use imbalances, fair value gaps. And then I also like to identify accumulation or distribution. So what I could tell here by looking at this chart is number one, we had those imbalances above. I use a different form of Fibonacci's to get the standard deviation box, which happens to line up with the golden pocket retracement, which was drawn from the highs here in November 2021 to the lows here in December 2022. So that adds confluence to this trade. The one thing I will call out, and so if you recall in my alert, I said it was a high risk alert because the one thing I didn't like was the volume. You can see that volume's actually selling off or declining as it's pushing up, which tells me that this run's not going to last very long, but it doesn't hurt to ride it while we can. And what I also liked about this was that on the weekly, it started making higher highs and higher lows over and over and over again. So that added conviction to my trade. And again, this is where I started entering here. What you can also see, also what I'm looking for when I chart is where's the liquidity, right? And so you had a major sell side level here, which got taken out during this manipulation move down. And you had sell side here, which was also taken out. So that gave it enough juice, enough liquidity to start pushing higher. And then you could also see that that's where volume really started coming in. And as we pushed up, we created these fair value gaps that ended up getting retested, which is also something that I like to see. Now, as I mentioned, we're going to start hunting liquidity. As it was doing this, it was generating, as it was pushing down, it's generating this buy side liquidity. You have buy side here, and it kept taking out those levels, then coming back down. And now, if we look, what are the buy side levels we have left? Well, we have one here, right at the golden pocket, around $72, and then more here around $78.26. So this is my target here. I would really like to see this 71 level be taken out, but that's kind of just a quick overview video of how I identified a 1,000% play. So again, just to recap, started off on the larger time frames, noticed that there were imbalances and fair value gaps above. If you note, the market likes to or tries to be as efficient as possible. So over time, it does like to explore inefficiencies and imbalances as for proper price discovery. I also like to identify stocks that look like they've had a rounded bottom and are in accumulation, making a series of higher highs and higher lows. And then it swept that major sell side level, which I also really like to see. So to add confluence to my trade, we had multiple different ways of using Fibonacci's to come up with a price target. We had different buy side levels that also align with that level. And then also I should have mentioned what I also like to pay attention to is I like to enter liquid chains. And so a lot of my positions have been for that January 17th date because that is the January OPEX, the yearly OPEX, quarterly OPEX. That is the most liquid chain of the year. And so that's why I like to target that chain. And we could even see here that open interest is significantly higher for the 55s. It's at 14,503. And so I like to find highly liquid chains to ensure that I won't have an issue getting out and also to ensure that the spreads are tight between the bid and the ask. So I hope that was helpful. We are running a promotion and we actually recently decrease the pricing of the Discord, trying to add as much value as possible for folks. So the Discord link is in my bio. You can use code RISE, all capital letters, RISE, for your first month free if you've never participated in our Discord. And we'd love to have you join and find additional plays like this. So we actually have quite a few lined up that I think are going to be monster trades. So looking forward to seeing you there. Thank you. Hi, everyone. I always forget to say this, so I'm going to say this now at the end. If you enjoy my content or if you enjoy what you saw in this video, please like and subscribe. This will help me grow. It'll also help me know if this is material or content that you would like to see from me in the future. So thank you all. I really appreciate your support, and I hope you have a great day.